My guest today is Christopher Hillier. Christopher built an employee benefits brokerage and consulting firm from scratch to 16 million in revenue and then sold it. Then got into ETA, Entrepreneurship Through Acquisition. So he acquired and invested in several companies. Today we are going to cover all of that. Thanks a lot for coming to the Holdco Builders podcast, Christopher.
Absolutely. Thanks for having me.
You're an Stanford MBA and a professor of business at the University of Denver. Please tell me where it all started. How were your early days before founding, building, and buying businesses, and not to mention not startup businesses? So can you share the story?
Sure. I grew up here in Colorado, which is where I still live today. I'm the oldest of 6 children, and I grew up in an entrepreneurial family. My father started a number of businesses early on, some that failed. One of those, just as a kind of a side story, was a laundry and shoe shining delivery business where he would go and collect shoes to shine at night and then return the shoes back to their owners the next day. But eventually he got into the employee benefits consulting business. He worked for a larger company for a period of time and then went out on his own to start his own business. And I think that entrepreneurial spirit wore off on me and some of my siblings. Even growing up, we loved to do simple things like lemonade stands, and a couple of my brothers started their own lawn mowing and landscaping businesses. But I feel very blessed and very fortunate for the circumstances I grew up in.
And 6 kids, how was it? I'm family of 4 kids, so how was 6 kids, growing up with 6 kids? It's a lot.
It was fun, and it's especially fun today. Now that we're all grown and older and more mature, we can get together and have a lot of fun. I just have great respect for my siblings, and now it's fun. I have 5 children myself, and so it's fun to have our kids get together and the cousins to be able to play. So it's incredibly rewarding, but I know growing up it was a lot, right? It was a lot for my parents, and you know what it's like. Even with a couple of kids, it takes a lot out of you, and it's definitely demanding.
So, what about the time in Stanford, getting the MBA? How was it when you graduated? Like, what were the typical options for people to do, or what were the desires? Was it like a .com boom, or what was the time, and what was your thought process of what is the next step?
Yeah, obviously a lot of my classmates got into tech, with Stanford being right there kind of at the heart of Silicon Valley. And then a lot of your traditional post MBA career paths, investment banking and private equity and VC and management consulting, the list goes on. But there were a lot of my classmates that also went out and started companies and did entrepreneurial things. I think that's one of the unique things about Stanford Business School is there's definitely a slant towards entrepreneurship. And of course, that's kind of where my interests were and where I ultimately ended up as well. But I think, at the end of the day, I think it's about 40% of Stanford MBAs ultimately go on to start a company at some point in time, whether it's directly after graduation or later down the road.
Did you start one right away, or you went to work for someone else first, or how was it?
Yeah, so we actually started our employee benefits brokerage and consulting firm before I went to business school. And that was something coming out of school. My father had just sold his employee benefits brokerage, and the company had gone through a series of mergers and acquisitions. He was kind of looking at what to do next, and I had an interest in doing something entrepreneurial. So we started the company back in 2008. That was kind of the start. I went a little bit later and completed my MBA, of course, and was still working on projects for the company and that type of thing, and then kind of rejoined after graduation and picked up where I'd left off.
So what exactly does this business do? Just to give an overview of how you guys made money, and how was the journey of getting the first 5, 10, 50, 100 customers?
Yeah, so we consulted with companies, organizations of all shapes and sizes, really, all different types of industries as well. on their employee benefit program. So we would assist them in kind of creating a strategy around what their goals and objectives might be, and then kind of custom building employee benefit plans that would meet those goals and objectives and needs of their organization. A lot of our clients, we weren't taking to purchase traditional fully funded plans from the traditional insurance carriers. We were actually assisting them to custom build their own health plan, for example, and then assist them over time to manage a partially self-funded program, as opposed to, again, a more traditional fully insured type arrangement. So we worked with small companies, we worked with very large companies, but we found a real niche working with mid-sized companies that were large enough to consider some of these types of more strategic arrangements and customized solutions, but didn't always have the best of options when it came to the advisors or brokers out there that they could work with on that.
And maybe a very dumb question. Who is it's like a chicken and egg situation, right? You have the providers and then you have the customers and you are in between. So how did you land the first providers so you could even provide what you do?
Yeah, so we were an independent broker or an independent consultant, and so ultimately we could represent all of the kind of the providers and the service vendors out there, and most of them are very open to working with brokers and consultants, right, that are properly licensed and all of those types of things. So that wasn't so much the challenge as much as you alluded to. Bringing on those first handful of customers is obviously tricky. We were small and we didn't necessarily have a brand name. I guess you could say it was a leap of faith for clients to fire their big house broker and decide to do business with us. And it was difficult and it was challenging, but ultimately, I think we had a very unique value proposition, and were differentiated in a number of ways that led to our success. And we're able to provide kind of an even higher level of support and service to the clients that we were working with. For a lot of them, working with more traditional big house brokers, there was a very specific way in which that relationship would come about, and that they would work with their brokers. But we were able to be very flexible and very adaptable in terms of what client needs might be and the way that we could support and serve them. I'll tell you a little bit of a funny story. Our initial business was, of course, employee benefits. At one point in time, we actually got into the property and casualty business. So working on professional liability insurance and work comp and those types of things. So this was a number of years into the business, but we had just started up the property and casualty operations, and we were working with a particular group that was working with Willis Towers Watson, one of the largest and most well-known brokerages in the world. And they had decided to put out an RFP. We participated in that, and we had just hired on a guy to run that business for us, but we literally didn't have any P&C clients yet. And we were very transparent about that with the customer. And at the end of the day, they had narrowed things down to us and Marsh McLellan, which is maybe one of the only insurance brokers that's larger than Willis. And I remember sitting at the conference table with this client and the CEO of the company, and him commenting that they were literally deciding between the very largest insurance brokerage in the world and the actual smallest in the world. But we ended up winning that deal. It was a six-figure contract for us and super meaningful at that time as we were trying to get that new business off the ground. And I think all of that really highlights one of the advantages that small businesses have in the marketplace. They may not have the same depth of resources as their larger competitors or the brand recognition, but generally speaking, they can be more customized and adaptable in their service model, and they can be more proactive and creative in assessing client needs. And they can dedicate the time to create unique solutions for a client or a warmer, kind of more hand-holding level of service.
As I'm not too familiar with that, could you please explain what does RFP and P&C mean?
So P&C is property and casualty. So at least here in the States, There's a lot of different types of insurance coverages that employer groups are purchasing. On one hand, there's the employee benefits. So they're oftentimes purchasing, medical, dental, vision, life, disability policies to offer and make available to their employees. But there's also the professional liability insurances that they are taking policies out on. So property and casualty would cover some of those more professional liability type coverages that they might need to insure. And an RFP is a request for proposal. So a lot of the times companies will put out a request for proposal, which gives an opportunity for service providers to respond with a proposal, answer questions that might be outlined in the RFP itself, and present a pricing type arrangement as well. So
you said that in the beginning your job was to convince those small businesses to fire their larger, like the companies they've been working before. So what was the value proposition from your side, and was it you or someone else who took care of this sales process?
Yeah. So I think our value proposition was, in the industry, there's these big house brokers, like I mentioned, and oftentimes, they can pretty much do it all. They have the expertise and the experience and the resources to do kind of whatever might be needed in a given case. But oftentimes, they won't necessarily deploy those resources or make those types of resources available as you go down market. So they'll be willing to provide a certain level of service and certain types of solutions to really large organizations. But as you go down market and you're talking about employer groups with 50 or 100 or a few hundred employees, they weren't necessarily willing to do those same types of things. On the flip side, you have a lot of really small independent brokers who might be like one-person shops and that type of thing. And they can do really basic things, right? Like they can go out and they can get quotes and they can spreadsheet options for smaller employer groups. But they don't really have a lot of expertise or sophistication when it comes to offering more kind of complex arrangements and alternative funding and those types of things. And so we kind of found a really nice spot right in the middle, if you will, where we were able to bring a level of sophistication and expertise and experience to clients that were maybe working with a really large broker that had it but wasn't making it available, or maybe a really small broker, right, who was providing great service and trying to be really helpful and supportive, but that didn't necessarily have the same number of options and opportunities that that we were able to come and provide.
And again, how did you make money? Was this like a one-time fee, or it was like monthly recurring revenue? And how sticky were the customers?
Recurring revenue and pretty sticky customers, which all made for a pretty attractive business, of course. The payments to us, our compensation could come in a number of ways, and every situation was maybe just a little bit unique and a little bit different. But there was the option to have the actual service providers, the insurance carriers and the administrators and such that we were connecting our clients with, pay us like on a commission basis. Or in other situations, there might not be commission in the plan, and the clients would pay us a consulting fee. And that consulting fee was ongoing. It was usually paid on like a quarterly basis. And that was in place for the life of the customer as long as they continued working with us.
Okay, and when it comes to growing and scaling this business, can you maybe share some of the phases you experienced? Like, was it the fast growth in the first few years, then it slowed down? How was it in your case? And when was the moment when you decided that, okay, we should maybe acquire another business?
Yeah, so it was pretty steady growth throughout. It's a service business, which means that scaling is hard and scaling is difficult. It takes a lot of grit and grind and hustle and just a lot of hard work and perseverance. So growth doesn't come easily or quickly per se. But again, we were very, very fortunate. We had a great value proposition. We did work hard at it. And, one of the other things that was kind of unique at at the very beginning was we started our company in the midst of the Great Recession at the beginning of 2008, which was a really interesting time, a unique time to start a business. Maybe for a lot of industries or companies, not the best time to start a business. But for us, that actually ended up working out well because the value proposition that we offered was that we could help organizations to better manage their benefit plans and to find cost savings and opportunities to reduce costs within their program. So we were getting the opportunity to talk to companies that honestly probably wouldn't have paid a lot of attention to us in better economic times. They just would have had, other priorities and things like that. But companies and organizations were looking for cost savings, and that was something that we knew we could provide. And so we got a lot of opportunities that way. Obviously, as time went on, in some ways the growth comes easier because you start to develop a reputation for yourself. And there's kind of the word of mouth advertising and, the referrals that come in and those types of things. But at the same time, you get to a certain point, and a lot of the new business sales were coming from myself, my father, my next oldest brother that came into the company a couple years after we had started. And so you do get to a point where you kind of hit capacity, and you only have so much bandwidth to go out and generate new business opportunities. And then you're looking to expand the sales team, which of course comes with its own set of challenges and cost. But again, we were pretty fortunate. We, over the course of that 10 to 15 year period, we were able to essentially start from scratch and grow the company to over $16 million in top line revenue.
And when did you acquire a stop loss, the underwriting company? When was it?
Yeah. So that was about 2013. So it was a few years in, and that was a really unique opportunity. It kind of fell into our laps. It wasn't something that we were out there actively searching for, but there was an MGU, a managing general underwriter that provided underwriting services and claim processing for insurance companies. And we essentially got made aware of that opportunity through just contacts we had in the industry, who let us know that the company was for sale, and they were in quite a bit of financial trouble. That company was actually kind of on the verge of going out of business. Which, by the way, for anyone out there that is looking at ETA or potential acquisitions, I don't generally recommend looking at and buying distressed companies. It's not in my opinion, it's not necessarily a recipe for success, but because it was in kind of a tangential industry to ours, and we knew a lot about that business, and it was something that we were pretty proficient in and heavily involved with, we felt pretty confident in our ability to generate new business opportunities for that company and bring volume and bring premium to that company. And so we acquired that company. We owned and ran that business for about 6 years before we sold it to a different buyer than we ultimately sold the brokerage and consulting firm to.
As it was a distressed asset, could you share maybe a structure of the deal, or how did you put it all together, and what happened post-acquisition, and what did you do, or what the previous owners did? Did they continue? Did they leave? How was it all?
Yeah, from a valuation standpoint, things didn't get as technical as you might imagine. For the seller, it was really a matter of finding a number that she was comfortable with, and based on what other prospective buyers were willing to pay. For us, there were obviously significant discounts to reflect the increased risk and uncertainty associated with the financial situation. There was value there in terms of functioning operations. There was a team of experienced underwriters. There were systems and processes in place. Maybe most importantly, they had a contract with a reputable reinsurance carrier. And an MGU is, generally speaking, not a risk taker themselves. So they have an agreement with a carrier that they're going to underwrite for and pay claims on their behalf. So we looked at market comparables to consider valuations of similar companies facing financial distress like this one was. We did some scenario analysis where we considered possible future outcomes based on different assumptions about the company's future. The company didn't have any debt, which was a positive. There weren't any legal or regulatory issues. We just kind of had to consider everything and then negotiate in good faith with the seller. And she was going to be staying on as CEO for a period of time. So we wanted to maintain a good relationship there. And although the prior owner was staying on to continue in the role of CEO, part of the agreement was that she would continue to work for the company for compensation that was less than market until the company was able to hit certain financial milestones. So that was one of the stipulations of her employment agreement or the asset purchase agreement.
And when building the main business, who were the largest competitors when it comes to size? And did you ever have a desire to grow as large, or you had this goal to maybe grow it to 15, 20 million and then sell it? Or what was the thought process or vision behind it all?
Sure. Yeah, some of the very largest of our competitors are huge multi-glomerate type companies, publicly traded. I mentioned the names, for example, of Willis, Towers Watson, and Mercer and Aon. So some of those companies are quite large, but we had a lot of smaller competitors in the areas that we were working kind of regionally, and when we sold the company, we weren't necessarily looking to sell the company. We were being approached by some prospective buyers and some folks that were showing interest. We didn't necessarily have an interest at that time in selling, but one of the companies that we were speaking with, who we ultimately sold the business to, was Acrisure. They're headquartered out of Grand Rapids, Michigan. And honestly, we kind of fell in love with the business model. At the time, they were kind of employing a roll-up strategy, and they were buying agencies all across the country and really all across the world that they were allowing to continue to work pretty autonomously and independently. So, it kind of became the best of both worlds, where we saw the opportunity to continue to run our own agency, have kind of all of that decision-making control and do the client work that we enjoyed doing, while taking some chips off the table and also accessing some of the resources that a much larger company did make available and have to offer, which ultimately served us well and served a lot of our clients well.
Did you sell 100% right away, or how was it, if you can share?
We did, although the specific model that Acrisure was using, a large portion of the purchase price was paid out in the form of company stock. So at the time, and still today, Acrisure is a private company. And so we actually were kind of reinvesting into the larger organization. And I stayed on with Acrisure. We sold the business in late 2018, and I stayed on with Acrisure for over 5 years and continued working with the larger parent company. A really amazing and fantastic organization. We were super pleased with just the way everything unfolded, and I was grateful for that, because I have a lot of friends in the industry, many of whom sold their businesses to other companies and other aggregators that are out there that didn't necessarily have the same experience, and ultimately kind of came to resent or dislike the company that they sold to. And fortunately for us, that was not the case. We were very happy with the deal we did and with the partnership with Acrisure.
Not all stories are like this. You start a business, you build it for 10 years, you sell it, and then you keep working for another 3, 4, 5 years. It's still a very rare case. So my question to you, what were the toughest times during this? Yes, you mentioned it was a stable growth all the time, but still, I'm sure there were some very tough times, tough quarters, years. What was it? What were the lessons? And what could be avoided?
Yeah, I mean, like any entrepreneur in their entrepreneurial journey, there were just so many lessons learned along the way. And it was hard. I think, for anybody who hasn't yet started a company or acquired a company and ran it themselves, like it's just hard to fully appreciate how difficult it really is. I mean, it's harder than you ever think it will be. It takes longer than you think it should, and there's just a lot of pressure and a lot of stress, and a lot of challenges along the way. And in part, that was impacting our decision to sell the company when we did. It impacted my decision to leave the company when I did. It takes a toll on a person, and I've had others ask me, why didn't you just keep going? You had such a nice business that was growing and had really decent margins and cash flow, and why didn't you keep going or employ a roll-up strategy yourself, right? And all of these different types of things, but it was very difficult, and there's sacrifices, of course, that you have to make along the way, and ultimately, at least for me personally, I got to the point where there were other things that I wanted to do and other things that I wanted to focus on. And when you're in it, like we were in it, you can't do it half-heartedly and you can't do it part-time. Like it consumes all of you. And that's what I was feeling, and that's what I was experiencing. And so that was kind of at least maybe the impetus, one of the influencing factors on why we ended up exiting the company.
You mentioned it takes grit, grind, and hustle. How hard it really was?
So hard. I can't even put it into words. I feel like I said, lots of sacrifices made. I mean, I can remember in those early days, we brought on one of our first very large clients, and maybe we bit off a bit more than we could chew. It was a big project, but I remember for a night, or maybe it was even 2 nights in a row, pulling all-nighters, putting together open enrollment packets that were needed for these open enrollment meetings that were coming up. Hundreds of employees, and we had a very small team, very limited staff. Again, it was super early, but I remember even like the printer that we were using was like not much more than a desktop printer, and we were doing this big print job, and that thing kept breaking, or shutting down, and like it was just brutal. I mean, I can remember on a number of other occasions, a lot of travel involved, and kind of going from one city to the next, getting very, very limited sleep, but that was what it needed, and that was what it felt like we had to do to ultimately make this successful. And so, I'm appreciative now of the fact that we got through it, and in a way that I was able to kind of front load my career like that, because it's ultimately led to a lot of flexibility and choice in terms of how I want to do things and what I want to do now and going forward. But it was extremely difficult. One more quick story, Mick. One more quick story I'll share, if you're okay with it. This is related to the acquisition. We were supposed to meet that company. They were based in Nashville, Tennessee. My father, my brother, and I, we had spent the week in New York City meeting with some of our business partners. We were scheduled to fly from New York to Nashville the same day that a super intense snowstorm hit the Northeast, and all of the flights were canceled. The snow created quite a mess in the city, but we had people flying in to meet us in Nashville, and we didn't want to disappoint them or miss the opportunity on that deal. So we actually rented a car and made a 14-hour drive through the night to get to Nashville. My father and I, we took turns driving through the night. And that first few hours getting out of New York City was pretty hairy. I think we stopped and got about 3 hours of sleep before kind of the big meeting. In the end, it all paid off. And I don't know, those are things you look back on, and was it really necessary? Was it really required? Could it have kind of worked out had we gone about it a different way? Maybe, but but you're just giving it your all and doing everything that it takes to get those deals done when you're in the moment. And so anyways, that's now kind of a fond memory, a funny story, but wasn't very enjoyable at the time.
What about the other co-founders, key decision makers when it comes to selling the business? Were you all on the same page when it comes to this decision, and time-wise, like you were all happy, or some of you were like, let's continue building the business even larger so we could make even more, or how was it?
We were all fairly aligned. So my father had actually he started the business with us, as I explained. But really, the only reason he was involved was because we needed him, and he was happy and willing to help us. Right? He had just relationships and experiences that were invaluable. But when he sold his first company, he didn't necessarily have to do this all over again. But anyways, he worked diligently with us for a good number of years, but phased himself out of the business over time. And so for the latter half of kind of that growth period, it was my brother and I who were running the company, managing the business, and we were both very aligned. We both felt really comfortable with the deal that was presented to us from Acrisure, and there was a lot of upside on a go forward basis too. As I mentioned, a lot of the purchase price was paid in the form of company stock. There were also earnout arrangements associated with that, and so we felt like we still had a good number of years going forward to continue to kind of maximize the opportunity and the value in the company.
I mean, building a business together with your father and brother, I think it's a very special story, because I guess I can't ever do that because my father is a simple truck driver in Scandinavia. So how special it was? Was there some tougher times when it comes to conversations, and how did you switch off when it comes to family gatherings, family meetings, holidays? How was it?
Yeah. Those are all, we could spend a whole podcast episode just on all of that. But it was amazing. I mean, I think anyone involved in a family business knows of kind of the unique dynamics there and some of the nuances. For me personally, I always felt like I just had to make sure that those family relationships took more of a precedence and more of a priority than anything that was ever going on in the business, because there were situations and instances where we had a difference of opinion or a difference of feelings on things. And it's easier said than done, but I think you just have to, if you're going to do it, you have to prioritize the family relationships, and everything from a business standpoint comes second. I can't say enough about my father and his willingness to mentor me and help me during especially those initial years. But one thing I will say is that whether it's family or not, I think every entrepreneur needs a good mentor or a few mentors to help them along the way. And that might be a friend or a professor or an investor, but nobody accomplishes success without help along the way. And you really need someone who will sponsor you, promote you, stick their neck out for you even. And without good mentors, you have just almost an impossible climb ahead of you. And for some reason, I think there's a lot of entrepreneurs who are embarrassed to accept help or advice along the way. They don't want it to take away from their achievements and their accomplishments. But I think that's really just ego talking. I feel incredibly fortunate to have been able to spend those years alongside my father and my brother. And in time, I actually had other siblings that even worked in the business, and those were really special times.
Now, what about the buyer? I mean, entrepreneurship through acquisition, you were able to sit on the other side of the table, like being bought. What did the buyer did well? What were they maybe not doing so well? What were some of the lessons about this experience?
Yeah, well, I think anytime you're looking at selling your own company, fit is just such a critical aspect of that decision, and finding the right partner, the right fit. and culture plays such an important role in it all. I think, there's entrepreneurs who might just chase the highest price tag. And maybe in certain instances, and if they're, they're walking away and, never going to be involved in any way, shape or form again, like, maybe that works in some instances. But I think ultimately you want to do a deal with somebody that you respect, that you admire, that you trust, and where there's a good fit. As we evaluated options, like I said, we had people kind of coming to us, and we weren't necessarily out there seeking folks, but we interviewed and had conversations with companies where it just became obvious there wasn't a cultural fit. And, rather than kind of waste time or consider going down that path and having it create much bigger challenges and issues and problems for us in our lives, I think ultimately we just wanted to find the right partner and knew that kind of the rest of things would take care of themselves. I think in those conversations, one of the most important things is just to absolutely cover expectations and every nuance and every detail that you can possibly think of, so that there aren't surprises, and that post close, exactly what to expect, exactly what things are going to look like. That was critical for us with our customers and our employees. We didn't want them to feel slighted in the least. We didn't want them to feel surprised about how things transpired. And so we got really clear in those early conversations with what things were going to look like post-close, so that we could communicate that accurately. And fortunately, in this instance, everything played out the way that it was supposed to. And, the buyer was true to all of their promises. One of the things that I did that I feel like was helpful, I interviewed probably 10 other business owners who had sold their companies to this particular buyer, to learn about their experience. And some of those were very recent acquisitions. Some of those had been, 2, 3, 4, 5 years old. And that was really helpful in getting comfortable with kind of how things would go, getting kind of those firsthand experiences from other business owners who had already gone through the process.
So when it comes to time-wise, 2018, you sold the business. You worked there till 2022 or 2023. Did you do something in some investments during this time, or you were just very committed still post-acquisition?
Yeah, during that time, I was just pretty committed to what I was doing. More recently, I've enjoyed being able to invest in and mentor other entrepreneurs. I've been a fairly active investor in the VC space, and also quite involved in the search fund community. I love the idea of being able to buy your way into entrepreneurship. And for those who have a desire to be an entrepreneur, but don't necessarily have an idea or want to build something from scratch, I feel like entrepreneurship through acquisition is a really interesting career path to consider. So I've enjoyed being with entrepreneurs who are bright, capable, and driven, and that are out there looking for existing operating companies that they could buy and step in as CEO to run. And that's been really enjoyable and really fulfilling.
And maybe not too much covering up the VC companies, but what about the other investments? Or did you invest the searchers, or what?
Yeah.
What exactly did you do? Or
yeah, directly with a lot of search fund entrepreneurs, as well as some of the more institutional or traditional funds out there that are being raised and managed. And I can tell you, when it comes to ETA, especially, I love businesses like the insurance brokerage space. Mm-hmm. Oftentimes it's these maybe somewhat dull businesses that are the greatest opportunities and have some of the best attributes when it comes to being an attractive acquisition target. High margins, recurring customers, recurring revenue, lots of stickiness. I think there's a lot of older business owners out there right now, and you've got the baby boomer generation that is looking to retire or sell their businesses. So I think there's going to continue to be just a lot of good ETA opportunities in the coming years and going forward.
What about the experience when it comes to wanting to buy a business, but don't have similar experience like you do, for example. You're young, you want to get into. What are your thoughts? Obviously, you can start from scratch, but as you just said, it's in your opinion as well, one of the best ways and best paths to build wealth is to buy a business. So when it comes to experience?
I mean, that's definitely a great question. And I think it's one of the things that we evaluate or struggle with every search fund opportunity that pops up. I'm teaching right now as an adjunct professor at the University of Denver, and a course on ETA to mostly undergrad students. And I will tell you that there's not very many undergrads that are probably really capable of graduating from college and going out and buying and running a company. So the purpose of that course is more just to give a flavor of ETA to folks that it might be something they want to consider as part of their career paths at some point in the future. For a lot of the MBA students, especially at these top business schools, they oftentimes do come with really great experience. They've been working in businesses, or they've been working in consulting or wherever it might be, and have some really great experience and are super capable, very bright, very driven. But I think you have to look at what is it going to take, and do I have the appetite for it, and do I have the skill set for it? There's a really good book out there. There's the E-Myth series. I don't know if you're familiar with it, but in one of the first E-Myth books, the author, and his name's escaping me, but he talks about how really an entrepreneur can't just be an entrepreneur. They have to be a technician, they have to be a manager, and they have to be an entrepreneur. And there's skill sets that come with each of those. And it's pretty rare that somebody has all three, that they have kind of the strategic vision and the passion and the desire to be an entrepreneur, that they have the leadership skills and capacity to be a manager, and the technical skills, right, to actually do the work that's involved inside of a business. And so I think you have to look at whether you feel like you can manage that and handle that. And in some cases, maybe you check the box of one of those or two of those. But you have to identify a partner or a higher level employee that you really trust and can rely on to bring one of the other factors. And so there's ways to kind of build a comprehensive team around an entrepreneur. But that's one of the things that we look at in search, especially. It's less about, at least initially, it's less about the actual business they're going to buy, because we don't even know at those early stages what kind of business might come across our desk. But we want to back entrepreneurs that that kind of have all of those traits and all of those characteristics to be successful.
Yes, I'm asking this because it's not only the question from the seller, like who's gonna take care of my business and are they capable of doing it. This is also the question from the bank. When it comes to financing the deal, like, is this team or is this person actually capable of taking care of this loan and taking care of this business? So that's why I wanted to ask this.
Yeah, I will tell you though that I think there's a lot of sellers out there who love that type of opportunity and that type of entrepreneur to come in and run their business, because it's an emotional process, and they might be able to sell to a private equity fund or, another strategic buyer that's going to just kind of roll their company into something much larger, and it's going to kind of get lost. But for a lot of those business owners that started their own company or have been building a company for years and for decades, there's something to be said for the legacy that they want to leave. And so a young entrepreneur who's going to come in and who's going to care and who's going to continue to kind of push that story forward into the future, I've found there's a lot of business owners that find that very attractive.
And what about some of the success stories you've seen when it comes to people acquiring a business, doing extremely well? Maybe you can share. No need to share the details, but some great stories. And then obviously the opposite of this, when things maybe went south.
Yeah, I mean, there's so many great stories out there. One of the things that I didn't even mention is, I was involved with the search fund community kind of all throughout the growing of our business because, I just had a lot of relationships and a lot of friends there. And we actually started doing diligence for searchers on their employee benefits and their insurance coverages. And in many cases had the opportunity, once a deal closed, to actually come on as the broker or the advisor at that point in time and work with these, search fund entrepreneurs as a service provider in managing their employee benefits or other insurance coverages. And so I've just seen so many amazing entrepreneurs and so many amazing success stories over the years. I think a lot of them are extremely successful because in some sense you're de-risking the process of entrepreneurship, right? You're coming into, and yes, there's a price to be paid, but you're coming into an existing company that is already operating, that's already successful, that already has, so many of the parts and pieces built out. And in some ways it's your job not to break that, right? and to look for ways to add, further value creation and kind of accelerate growth and those types of things going forward. So, there's so many people out there that I just feel have benefited from those types of opportunities. And every once in a while, a deal goes south or doesn't work out. But at least in my experience, that's actually a lot more rare than you might think.
And what about your insights from teaching all this? Has it changed your opinion, maybe even stronger, that this actually is the best opportunity to go for? Or because oftentimes when we teach something, there is a process of learning something. So, and it requires a lot of thinking time, a lot of silence, being in a quiet room, reading, writing down notes of what you're about to share. So how has been this journey for you, and what have been some of the insights from teaching this?
Yeah, it's been really fun. And I mean, I think anyone just has to really evaluate whether it's the right career path for them. As we discussed, it's hard and there's a lot of considerations. It may sound all kind of rosy at first, but you need to really dig into what things look like on a day-to-day basis and talk with others who have been down that path and ensure that kind of lifestyle aligns with what you're looking for. In some ways, I've almost seen it in some instances as my responsibility to try to convince somebody that this is not what they should do, mm-hmm. to see how bad they really want to pursue this path, because I think you have to go into it with eyes wide open. You have to have your expectations set properly. But it's been a lot of fun working with the students and kind of that younger generation, just to see how exciting it can all be, to see the excitement and the passion that the students have. It gets me excited all over again about entrepreneurship in general, and kind of rekindles in me what I know I felt early on, but maybe over time started to lose a little bit as I matured in my career. So definitely a great opportunity, but not necessarily the best fit or the right opportunity for everybody.
And what is the advice to someone, the people listening, to students? You said they're young, they should maybe get some experience first. What would be the 5-year plan for them to actually acquire one, in your opinion?
Yeah, I mean, for a lot of traditional searchers, that search process can take 12 months up to 24 months. It's not always quick that you find the right opportunity. It can be lonely. There's not a lot of people that kind of understand what exactly it is that you're doing or looking to accomplish. So I think, again, probably the best advice I would have is really dig into what things look like on a day-to-day basis and talk with as many people as you possibly can that have experienced that firsthand and been down that path, and ensure that's ultimately what you're really hoping to get out of the experience. Obviously, there's financial rewards, but I think so much of the benefit is kind of outside of the financial the financial part of things. I mean, there's something to be said for the flexibility and the control and the ownership and the ability and the opportunity to build something. And I think ultimately those are the people that find the most success, not those that are looking for kind of the greatest return or, a way to kind of get rich quick in their careers, but those that are really passionate and really excited about building something.
And what are your thoughts? Should people just buy something to get the experience, to just get going? And if it doesn't work, you just, I don't know, sell the business, shut it down, whatever the third or fourth scenario, or you're more into building a strong track record of waiting for this great deal or great opportunity. Then once you find it, even if it takes like, I don't know, you mentioned 24 months or longer, and then doing this deal. So my question is, should one do any deal to gain experience, or you're more towards the process of waiting for this great deal, then doing it, building a great track record, so investors will be, in the future, they will be like, okay, this is the guy who I would like to work with?
Yeah, I would definitely say the latter. In my opinion, it's better to do no deal at all than a bad deal. That's not fun. That's not enjoyable for anybody. And you might not get a second chance, right? You might not have, investors or a bank or whatever it might be who's willing to back you a second time. So it's worth being patient. It's worth finding the right deal and a good deal. And I think any searcher at kind of those early stages has to really kind of lay out what are the criteria, what are the metrics, what are, what's kind of that checklist of what I'm looking for, and don't rationalize a deal that's not the right fit just because you want to get something done. Continue to put in the time and the effort and the energy to find the right one. There's a lot out there, and if you're looking for experience, I think the better way to get experience is to go and work in operations at another startup, right? Find a role and an opportunity to really have a difference and make an impact somewhere else. Learn those lessons, right? Those hard lessons to learn, and then
get paid doing it.
Get paid doing it. Yeah, there's a lot of opportunity cost of searching. If you're searching full time, I mean, there's no paycheck, involved with that. Some of the traditional searchers are paid for their search time, but there's opportunity cost. And so I think get the experience, learn those lessons, and then when you feel ready, mostly ready, because nobody's ever going to feel 100% completely ready, at that point, kind of take the dive and go out and do something on your own.
You know what's funny? Like on the last podcast I had Joe and Colin, and they did the first option. They just bought the business from Craigslist. I think it was a very small business, 250,000 in revenue. It was like a trucking business. So it didn't go that well. So what I mean in here, very soon they found themselves driving with trucks during the night. And it's crazy. They did that for some time, and they found this is not the best industry to be in. This is not the best company to own. They sold it, and they bought another one in a different industry, and they went from there. And today the holding company, they've done like 14 acquisitions, sold 2 businesses, and the holding company does like 30 million plus in revenue. So again, there is no right and wrong, and that's why I wanted to ask your opinion. I'm obviously more towards the second as well, like try to do very good deals. And
well, it's easier too if you're doing a smaller deal, and it's easier if you're self-funding the deal, right? Because then it's really on you, and what the risk is. But if you're involving others and working with other people's money, I think that's where you have to be a little bit cautious and a little bit sensitive, and hopefully those folks won't let you do a bad deal, right? Because they want you to succeed, and they want to be successful themselves in their investments. So it's definitely a collaborative effort.
So you have this excellent combination. You have experience, you have confidence, you have capital, Now you have the knowledge as you've been studying, and not just studying, but teaching this as well. You've investing in people doing it. So what's next for you?
Yeah, I'm working on a number of kind of things right now, and not necessarily just business related stuff. Getting more involved with hobbies and just things that I enjoy. I am working a little bit in consulting with some companies on some things. One of the things that I have really enjoyed is writing, and I actually just published my first book that released last month. It's about time, and it's just all about my lived experiences related to a lot of the things we've talked about here today, and how to find purpose and meaning in life's experiences. And I'm most of the way through my second book now, which is on character development. And demonstrating character in our personal and our professional lives as well. So that's something, that's kind of a new hobby, if you will, that I've picked up and that I really enjoyed, and has been good for me to it's been therapeutic to get, thoughts down on paper, and hopefully others will find value in it as well. So I don't know what the future holds in totality, but there's a number of things that I'm working on right now that are actually very exciting.
Can you say, I'm asking because I'm younger than you, so trying to maybe avoid some of the mistakes, if we can say so. But where are you chasing money when building the business, or you already had those hobbies and all that? Because you mentioned like you worked extremely hard, and you mentioned the purpose and meaning. And did you lose it maybe while building the company, while chasing money, or how was it for you?
Yeah, that's a great question. I mean, I think the money factor is at play probably for most people in some fashion or some form. Obviously, I had goals to be successful with the business, financially and otherwise. But
I'm asking because this is one of the reasons I'm doing this podcast as well. Oftentimes, the people I'm talking to are 5, 10, 20, 30 years ahead of me. And obviously, it's about business, it's about money, it's about returns. Otherwise, I wouldn't do that, and I would maybe interview yoga teachers, So that's why I'm asking this question.
Yeah, I love the world of business. I think there's so much personal growth and so much personal development that takes place in that process, right? Especially for an entrepreneur starting or buying and running a company. You learn so many incredible skills that will serve you well for the rest of your life. Problem solving skills and conflict resolution. And the list goes on and on. You learn character. I think character is one of the most important attributes for any leader. I think if money is the primary driver or the only driver, you've got a long road ahead of you, and it's going to be very difficult and maybe not very enjoyable. But I think when you can find greater purpose and greater meaning in the work that you're doing, and the impact that you're having in people's lives, whether it's partners or customers or investors or whatever it might be, there's a lot of joy and there's a lot of fulfillment that comes from that. And I think I've always kind of been bent that way. And I think your scorecard of success can include a lot of different metrics. It can include those financial metrics, but it better include a number of other things too. Otherwise, I think you'll look back at the end of the day, and whether you have a lot of money or you don't have a lot of money, you won't feel a lot of satisfaction in the work that you've done.
Okay, so good. Learning, taking notes. Quick fire questions. I want to respect your time. How old are you?
I'm 40 years old. My gray hair would have you believe that I'm a lot older than that, but I'm 40 years old.
That's fine. Favorite book?
I think at least right now I have to do some shameless self-promotion and go with my book. I released It's About Time last month, and that's been a really fun project for me.
That's totally fine that you're saying that, because I've had few guests who've said the best one is the one you write yourself. So go write the book, they said to me.
Yeah.
What's the best investment advice you've ever got?
A few people have shared this with me, and I like it. I believe it. And it's that it takes concentration to get rich, but diversification to stay rich. And there's something to be said for, at some point, right? Just low cost, passive index funds. But for a first-time entrepreneur, there's also something to be said for putting all your eggs in that basket, so to speak, and really just going after it.
Okay, and last one, where can people find you if they want to ask additional questions? Maybe they have a great business, they want to pitch you, where they can find you?
Absolutely. I'd love to connect with anyone on LinkedIn, so you can find me there. You can also email me at chillier, that's CHILLIER 21 @gmail.com.
Okay, Christopher. Honestly, thanks a lot